Ladies and gentlemen, welcome to our class. Today is April 24th, 2022. Today we're going to examine the moving average. When we look at our charts, what are we seeing? What is it telling us? Sometimes some people would tell us that the moving average serves as a resistance. Does it really serve as a resistance? In fact, when we look at the moving average, what is it telling us? It can serve as a guide, but is it really a resistance? Now, if we learn as we learn our trading, many people would look at the thing, they would look at the chart and tell you, look at here. It comes down, rejected by the moving average. It comes down again, rejected by the moving average. And it goes up, comes down, hit the moving average, rejected. So this is telling us that the moving average is doing something in this case. But is the moving average doing anything? Is the moving average following the stocks, following the stock price? Or is the moving average that is like a road stump that is holding the price and they're moving it in a different direction? That is the question that we want to examine today. And again, we want to look at when we look at the moving average, we would see that we have, for example, here, I have 20 moving average, 100 moving average, and 200 moving average. What is that telling me? When I look at my chart, what am I seeing? Today, we want to examine that. What am I seeing? Sometimes we would put those in there. I would say, okay, if 20 moving average cross above the 100 moving average, or 8 moving average cross above 20 moving average. What is that telling us? Some people say it's telling you to buy. Is it? That's what we want to know. Is it so? Now, let's examine. Here, we can see what the moving average can tell us. One, it can tell us the momentum of the price, the momentum at that given period of time. It would tell us that for sure. If we look here, you can see here, let's see, the moving average crosses, but you can see they are very close to each other. But as it is going up, as it is pushing up, the two became separated. Now, here you can see that the 20 moving average and the 100 moving average are getting closer. That is telling you that the price may still be going up, but it's coming closer. The momentum is losing. It is losing the price, the stock or the equity, the Forex is losing the momentum. So it tells us one thing. It tells us something about the momentum, the energy behind, the power behind the stock. It tells us that. And that's where you can see in this line. Consider the distance between the line. It tells us that. So one, it serves as a momentum for us. Number two, how the level of the momentum. If we see here, you can see the railroad track here. Look at how much this stock has been going. Look at how it has been going. Now, if we look at the higher time frame, this is 100 here. This is very important that you need to know. This is very important that you need to know in order for you to understand the moving average. When you're looking at moving average, you need to know what it's telling you at the order time frame, at the higher time frame or at the lower time frame. This red line is 100 moving average. That 100 moving average is telling you that if you go to the weekly 20 moving average is in the same place. The 20 moving average on the weekly side would show you the same number as the 200 moving average. Why? You take weekly is 5 days. You take the 200 moving average in the daily, divided by 5, it will give you 20. You have the same number when you are in the weekly side. If this other one that I put here is 200, the 200, if you take that 200, you divide it by you divide it by 5. How much you get? It's 40. Now, if you have a 40 in your weekly, it will show you the same number. Let's look at that, because this is the core of our lesson today. Let's look at this. Here we see that the 20 is 4496, isn't it? 4496. We see that it's 4496. The weekly is the 20 moving average is 4496. The 200 moving average is about 4492. The two crosses. If we go to the weekly at the weekly level, we would see a thing. Now, if we look at this other one, the green line is 4414.78. Okay, approximately. Now, let's go into the weekly and see what is that telling us. If we go to our weekly, if we go to the weekly, if we say the 100 is, we are on our weekly, the 20 moving average. What did we say the 100 is? This 100 here, this 20 moving average, this 20 moving average is the 100 on the other side. Now, what is it telling us? It's telling us that it's at 4467. 4467. Do we get that at 100? Here it says 449. So there is a little different. If we zoom this out a bit, so 449, you can see they would all be around there, around here. Because the week has not been completed yet, but it's very close. Very close. It's very close. The weekly is around 4497, and you can see 4492. 4473, 4492. This line here is 20 moving average. But if you go to the lower time frame, the daily time frame, you would find that it would be the same as the 100 moving average. It will be the same as 100 moving average. If you look at the weekly 100, you multiply that by 5, that will give you 500 moving average on the lower level, on the lower level, the daily level. People don't use that much. Usually is the 200, that's what the institutionals use, 200, 120. But they would help you understand. If we look at the 1 hour, if we look at the 1 hour, we have this 20 moving average. We have the 100 moving average. We have this 200 moving average. So if we take 1 hour, 1 hour is 60 minutes. But how many hours do we have? It's around 8. So if we want to figure it out, no, we don't have about how many hours? About 5, 6 hours, approximately, because it's 8:30 Central Time to 3 o'clock. So that would give you 10, 11, 12, 1, 2, 3. So about 6.5 hours. If you take that 6.5 hours and you divide it by this 200, it will tell you what moving average, what that particular moving average would be in the daily side. So what I always do, I have this, in most cases, even though if I don't have it on the screen, but I would have this there. Let me get back to the daily here. So I would have this in place because it tells me, it helps me understand what is going on the weekly side. When you are trading, you need to know what is going on the other side. You cannot just be sitting there, you don't know what the weekly is doing. Here, if we look at the weekly, what is the weekly telling us right now? The weekly is telling us that the stock is on a downtrend. It's on a downtrend. How do we confirm that? Well, let's see. If the stock is on a downtrend on the weekly, lower lows, it picks back up, it was going to go, then it comes down. Well, how many do we have? One, lower lows. We have lower lows, lower high, lower lows. Then it forms an equal high here. It forms an equal high. If it closes above this high, if it closes above this high, and then this other one also close above this low, then we may expect to see an upward move. But at this point in time, we are on a downtrend on the weekly side. Let's look at that, what that is telling us on the, and if we look at the moving average, the 20 moving average, which is what? The 100 moving average. We already passed the 100 moving average in the daily. So when we look at the weekly, we can know what is going on in the daily by looking at the moving average. If we don't have that on our chart, you wouldn't be able to know that unless you go and look at it. But if you have, that's why the moving average can be very important in our trading. It can tell us what is going on the other side. By just looking at it, we can tell what is going on. Let's go back to the daily. Here we are in the daily. You can see we have the lower low, lower high, lower low, equal high, and then we continue going down. Now we are seeing an equal low, because if you look at here, the wicks are lower, yes, but we are within that range at this point. And today is showing an upward move. We are within that range. Today close higher. Is it possible that it's going to go a little bit, retrace back to this? Is it going to retrace back to this level here? Back to this level and then pull back again. That's a possibility. It can go to this level, pass here, or pull back a little bit and then go up. Most cases, when we start trading, this is what confuses us. Looking at the chart and tell us what we are looking, then spending money on indicators. They're all in the system. Any system that you are using right now, have a moving average in there. Put it in and look at it. It will give you the idea what is going on at the higher level, at the higher time level, and at a lower time level. It would tell you that. It's not a resistance. It can serve as a guide. When you see that it comes and hit this and then go back, then you know, yes, it hits this particular moving average and it went up. But it's not the moving average that is a resistance. It just gives you the idea. This price comes down here because a lot of institutions use the moving average. The programmers are human beings. They use the moving average, saying when it gets to this, stop. Then it became self-fulfilling prophecy. That's why we see that. Here, look at it. It just hit the 200, bam. It hit, but look, it came, hit, went up, and then come crashing down. It didn't stop it. What did we learn here? Moving average is not a support or resistance. It helps us to guide. It tells us the momentum of the price. And again, we can use it by knowing what is going on at the higher level and the lower level. We can do that. If you put a 60-minute, if you put a 60 moving average on your daily, if you put a 60 moving average in your hourly, it's telling you something about the daily. If you put 200 moving average on your daily, it's telling you what is happening at the weekly level and even at the monthly level. Just take it, divide it by what it's supposed to be. We look at the monthly. If we go in and look at the monthly here. So if we look at the monthly, now we can see the monthly is in uptrend. The major institutional buyers would still buy the stocks because they still is telling them it's retracing back. The candle is red. They may wait until they see a green candle here and then go, because they are investors. They don't look at what we look, whereby we look at 5 minutes, 60 minutes, or a daily. No, they might look at the daily or 1 hour to time their entry into the market. And through that, they can use the moving average. We can see that this moving average, the 20 moving average is right there. The price came and hit this. It came all the way here, closer, went up, comes down. Doesn't tell us that this is going to be a resistance. What is telling us that it hits there. Since many people look at those moving average, we can say, okay, let's see what is going to happen here. But we should not have this belief that the moving average is resistance or support. It's not. Thank you very much. We will conclude our lesson today, and we will continue looking at the market in a different way. Thank you.